live.
Okay, we're live.
Happy Thursday, everyone. This is Crypto and Coffee with the Trading Bros. I'm your host, Clutch Crypto. Got B. Wellington over here.
What's going on, baby?
Guys, we continue to drop. We went down and hit our next target that we were talking about. And big question is this going to hold, or are we going to move up today, tomorrow? Are we going to keep going down? What is going to happen?
Look.
Hey, man.
I want to make a statement. How are you doing this morning?
I'm doing good, man. How are you?
We're on early. By us being on early, does this make up for the times that we've been on late?
Okay, yeah.
I'm asking. Is that a good statement?
Is that acceptable? Yeah, I think so. Because by the time people get to the show at a normal time, it'll already be live and they can already watch it. So, absolutely. I think being early is a lot better than being late.
I'm just saying, does it make up? We got to look at how many minutes are we early, and then we got to subtract that off of what.
We're only 15 minutes early.
So we have an average, but we're normally only like 5 to 7 minutes late.
Hey,
anyway,
this is something you're just way over thinking.
Let me make a statement. I'm over analytical.
About the time thing. We're here. That's what matters.
Here's a statement that I want to make before we get started, because we talk about these these drawdowns, and we're happy about it because we're trading, right? But there's a lot of people that have a lot of portfolios that don't know how to trade to the downside, that are hurting right now, and they need some comfort. They need to know, but I can't give it to them, man. I think we're going to zero. I'll ride that bitch all the way down like a buck of rocks.
You're such a dick.
We told you, bitches. We told you to get into a short. You should have been shorted since 3,000.
Well,
really, from 4,000. But if you wanted to, I'll take you through it. We got 40 minutes.
Take us to the charts and show us. Show us when we're going to zero.
Okay. Hold on.
We don't really think we're going to zero, by the way, people. Hey, man, nobody wants to see all your shit.
Edit that shit out. Look, here's the monthly that we were just looking at on USD. Here's zero.
Yeah. Well, you got it all very condensed, though. You're looking at an absolute bottom at like what, 400? Yeah, spread them cheeks. Spread them cheeks. Let's see them.
If you buy at 4,000, 400 is zero. Let me tell you.
It might as well be. Fuck. Game over.
I mean, look at the principles of traders.
It really is 400. I was just taking a guess there.
No, look, we've got vectors on the monthly, and of course they don't always come back to these vectors, right? I mean, but they always come back to the vectors. I mean, kind of a scary chart, but it's something that you need to put into the possibilities. This is, when we look at this area here, this is the resistance, right, that everybody's holding. It looks a lot less like resistance when you get all the way up here. I mean, the only thing we've got, here that's holding, which we came back down and held on the monthly this one time. So let's see if we can do that again. But let's get back into looking at what we always look at, which is the daily. I'm on the ETH USD. We normally do the ETH USDT, but I wanted to look at the USD chart a little bit because it's got more information. It's a bigger market at this point. Or it's been around for longer than USDT, and therefore we've got things like the 800 EMA on the daily, which doesn't show up on the USDT chart. But we are coming up on the daily on this chart on the 800 EMA, and so the point is we're hoping that holds. But as we very well know, there's a possibility that it couldn't. But I would anticipate, I mean, we got down to 1775, we're back up to 1935, 1930. So we have had a little bit of bounce. I think a lot of that has to do with people buying off of the 800 EMA, and of course what's going on with Bitcoin as well. But here's your natural resistance. We've had boom, 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 these 3 points that hit here, which form, what, folks would call this W, or this reverse head and shoulders, if you want to call it that. We've had this rise, this level 1, we've had a rise. And what we've done is invalidated this entire base here. And so if we do lose this area, you would say that your next resistance will be at this 1500. Looking at some of the order book, I know there's a lot there. But again, we did look at the monthly, and therefore, coming down sub 1,000, nobody wants to hear it, but it is a possibility. So, if you're out there trying to, quote unquote, catch the knife, I think you really have to look at the macro situation as well, which we'll talk about. But from right now, we were at the 800. We could hold, we could bounce from here just a little bit. Any bounces that we get from this point, I would imagine, would be a bear trap or bull trap back to the downside. But we are in a critical area. But it just doesn't feel on the macro side like the equity, like the liquidity is gone out of the market just yet. So let me hop back over to the USDT, which has all of our lines. But again, as you can notice, it doesn't have the 800 EMA. It did want to show that. And so all of these lines, all these green lines represents vectors that, we have to come back and hit. Very, very interesting that our trend line from this downtrend is kind of in the same area where that 800 EMA is on the USD chart. But again, it's the same chart, right? It's the same movement. And so 1475 is kind of the baseline that I have here. That'll be the next area if we get down there that I'll look at to show support. But again, look at all the sell-off that came in here. Again, very, very interesting. So if we go into
I want to see the funding rate.
This is so depressing. I didn't even go into the lower time. We skipped over all that shit.
Yeah.
Lower time frame, we got the daily open above us, of course. We did take that dip down into the 1700s. We still, and this was a big wick that came down, brought us back into this area. I think I moved that one. I don't know how to do that. And so, again, these are imbalances in the chart. I would anticipate that we get back to those. We do have daily open, depending on how the shorts are reacting, how liquidity is reacting. Move that out of the way. We could get back up here into these areas, 2151, 2150. I would anticipate, which is kind of the last peak, that we've had since this downside. But we'll see. The last vector that I see that's clear on the downside is 2017, which is also where this peak here was. When I said peak, I mean above the daily open. I would anticipate that we get back to the daily open, at some point. But again, I think this gets recovered. When it gets recovered, I don't know. We've been going down so far this week. I would imagine at some point we go back up. But Clutch, as you talked about, funding rate before it hadn't changed, so a lot of people were still holding on to those long positions. I don't think they're holding on to them anymore.
Let's see if funding rates, we start seeing some negative activity.
And we'll get to the funding rates.
See, some people are starting to go short now, so this is probably a good indication that we're probably going to see some movement to that side.
So stupid, right? Like, we've had all this downside.
But hey, you have to understand that, all of these exchanges, a good chunk of these exchanges have a lot of retail traders, and this is what the market does. The market will let you bleed until you're ready to cut off both your arms and your legs, and then when you're done with that, it says, okay, let me go back up again. And then,
okay,
you just continue to lose money all the time.
So So look, here we go. We're down in this area. People are starting to capitulate. They're starting to get out of those long reverse positions. This is all the USDT margin, USD margin. The coin margin, people are sticking in. So these are people that are holders. I would imagine these are people, well, I wouldn't imagine these are. That's why it's coin margin. Coin margin is the fact that your margin, like if you're in Ethereum, your margin with Ethereum versus USDT or USD margin, where your margin um, with USDT or so coin margins generally works better when you're onto the upside because you're accumulating USDT USD generally works better in a downward market because you're basically accumulating USDT or USD, which doesn't fluctuate to the downside. So I would imagine these folks here are holding on because these are true holders, and probably have a significant portfolio of whatever coin that they're doing. In this case, is Ethereum. So yeah, we should start to see some reversal, which we already have when we got down to that 1775. I think it was low, and then coming back up from there. Open interest, we'll just take a look at this real quick, is at 5 billion, which at the height of this thing, I mean, I think there was 15, wasn't there $15 billion at the height of this deal? We were looking at
It was 14 or 15, yeah.
Yeah, 14, 15 billion. So they've taken $10 billion out of the market, and this is within a year. So, and all these people are talking about all the billionaires are getting richer. It's because you're giving them the money. Me too. And you're not giving them a little bit of money, but, we're getting some of it back. So, but funding rate, funding rate looks like we're ready for a turn. Weekly cycle looks like we're ready for a turn. Even though we've had an increase, which is going to be indicative of that funding rate, even though we've had an increase in price, OI has kind of remained stable, so people aren't really participating in this market. They've probably already been liquidated. If we look at exo charts, which this I just refreshed not too long ago, looking at, on the TPO, about a week's worth of data, maybe not even a week's worth of data.
Man, that red line's way up there.
Yeah, I mean, we've had such a fast drop to the downside that, yeah, I mean, our POC is at 26, 20, what is that? Is that 2682 or 2582? No,
What?
it's 2682 is our.
Hey, man, that's where the CME gap's at. Literally.
2682.
I have 2683.
Hey, man, we should do a counter of how many times you say CME gap on the show. There's a. So
Hate all you want, man.
Hey, that's not hate. Hey, man,
It's the real thing.
Don't take as what I say as hate. I just want to counter. Look, there's a and so we've had decline in both longs and shorts according to exo charts, and
Nobody knows what the fuck's about to happen.
USD. I mean, liquidity is just losing the market. Is just is leaving the market. We're at a point now where we're at this support level. People don't want to short at support, right? And so I think shorts have declined somewhat. I think if we break through the support area pretty nicely, I think people will come back to it, but I'm just not seeing it yet. Dow futures, we're looking at that one. Dow's, S&P, NASDAQ. We normally look at NASDAQ and S&P, NASDAQ being the futures. Technology-wise, I mean, we're still early, but we're to the downside, which, if you notice, a lot of times in the pre-market, when it's down and we get a turnaround to that day, even if it turns back around and goes back down, there's generally some type of manipulation to try to get people back long. I think that will happen since most people are supporting anyway, and they believe that we're at a bottom. I think we'll get probably a nice pump. I mean, getting back up to that CME area that you talked about, Clutch. Look at the headline. Stablecoin Tether breaks its peg. So Tether did break for a little while. Not as bad as UST. But I think there's a lot of concern in the market, but Tether is back up to $1. So I mean, it'd be very difficult to break Tether, I believe, just because of all the institutional participation, across the market. But we'll see. As they say, cash is always king. Man, look, I mean, we still got oil's at 1846. I mean, we're at 2000 at the height of, everybody was talking about inflation, everything else. Oil.
These are the signs of the true recession starting to happen.
Yeah, I mean that's one of the reasons why, I mentioned, we're at this support, and everybody thinks this is the base, but I don't think we're at the base because the macro environment still hasn't really taken. I mean, we just printed a CPI which was less than last year, but on pace. If you look at the quarterlies, we're still on pace for a higher inflation number. I mean, they just went lockdown over in China. Food prices are still. I mean, we talk about the fertilizer issue. Food prices are still astronomical, and will continue to rise. So we're not, we're not nearly out of the weeds just yet. That's what I got today.
That's all he's got for today. Let's see what I got.
That's a lot.
Let's see what I got.
Hey, but look at this line. Look at my line over here. Look at that. Straight money, baby. Bounced off.
I know.
Bounced. I came under it. Took out everybody's stops who was here. They probably took out some stops here. You should put it under this line here.
Can you see my chart?
Your deal here. Hold on. Can I see your chart? Yes, I can see your chart.
All right.
Thanks for putting that up.
Very cool. This is High Block Capital. This is liquidation, something we look at every morning. We've gone all the way from negative 11 billion. We're back now to negative 7.5 billion on the liquidation delta here. As you can see, we've started to move up. As you can also see, most of the ranges are filled in pretty nice and tight. We do have CME at 2683. That has yet to be recovered from last week's Friday close. So that's a very important area to pay attention to. And the 2775, obviously, or 1775, excuse me. If we break below that, obviously expect some lower lows coming in. However, we have this area right here at 2175. If we break above that, would expect us to, next area of resistance is going to be in the 2432 range, and of course up here into the area that we have CME to close is right up here in this 2600 area, along with a $60 million short liquidation. So will we get back up there and grab it? I think absolutely we'll get there. However, will we get there in the next 36 hours to close for the week? That's left to be determined. Let's see what we have over here on the book map. I kind of sounded like an announcer there. Huh? News Channel 3. Check us out on News Channel 3 at 6 o'clock. This is loading here. I'm just going to swing out to get a little bit bigger graph going, just so we can take a look at where the heavy orders are. Yeah.
Can you swing down to 400?
Yeah. Oh, okay. All right. So this is actually pretty good here. I think. So what we're seeing here. So we're hanging out at 1943. There's a cluster of over 11,000 orders here at 1,800. Typically,
and everybody's got their stop at 1750.
Yeah, and you got 1750 right here with 6,600 orders. Typically, unless they spoof the orders right before we get to it, typically, especially when we have this kind of volume as far as orders go, they'll go in and chew in it for a minute and then get a bounce. We get a bounce here at 1,800, which will make a new higher low from the one that we just made here recently. That may be a really good indication that we'll have some upside movement. So we really want to pay attention to what happens at 1,800. We break below 1,800. Obviously, the next area of support will be 1,750. I will slide down here, let this load up.
Well, let's talk about this, because this is part of strategy, right? So
this is all strategy. Yeah, absolutely.
So you got somebody, it's Thursday, right? We should get a reversal. We've been going down, but yet we've got all these orders to the downside. So, we also see funding rate starting to change, which is kind of an indication that people are going short. And then we've got liquidations up top as well, but we've got these baseline orders down here. that we like to that the market likes to hit. And so, what are your thoughts? Are your thoughts that we go down here, hit those, and then go for the reversal? If we see some downward action, do we think it's going to be quick, pipe that down, and then reverse back up to take out some of this liquidity? What are your thoughts on that?
I think what very likely to happen is that we're going to go back and retest this 1800 area, and then especially with this volume of orders again, they can pull these orders at any time. But right now, what we're kind of looking at, this is also the bottom of the session range, session volume profile. I anticipate that we're going to go down there, kind of hit it, and then get a relief bounce, and then start moving probably up to the upside for the weekend.
So you think we'll get probably a stop, because we got the open and in 10 minutes, 11 minutes. So maybe a stop hunt to the downside, get some more shorts on board, because not all of the exchanges really. I mean, we're still seeing it really mixed relative to the short side. So I think we do have some, maybe a stop hunt to the downside, and then a pull back up.
That's what it's looking like right now. Yeah.
Thanks, weather guy.
Yeah. Yeah, I guess this is more or less like advertising for the weather, right? Or talking about the weather.
It's either going to rain or it's not going to rain. It's going to be hot. It's going to be cold. So it's either going to go up or it's going to go down. All that liquidity down there, though, I mean, a lot of that liquidity, I think, has been sitting there for a minute, right? Like, people are moving a bit.
Well, we were, a few days ago, we saw the same volume orders at 2,200. We came down, bounced off 2,200, and then ended up breaking through it. We had the same scenario at 2,000 yesterday, and it when it came, it bounced off of that. You remember, we were talking. I was like long 2,000, and then it came right back down to that the new support area 1,800. So when we get to that 1,800, pay close attention to see what happens. If we break the last wick, which got down to 1,775 last night, if we break below that, then we'll see some more movement to the downside. But there's some heavy support right now sitting at 1,800. Heavy support.
Yeah, there's a lot of folks that think that is le bottom. But as we all know, it's just difficult. Look at the macro environment. Look at the macro environment, and we're still correlated with the markets. Whether that's a good thing or a bad thing, but we are, and so we've got to expect that if there's more downside, and again, that's up to you guys. What do you think? There's more downside to the traditional markets? I do. I don't think we've really felt the pain just yet. I mean, a lot of liquidity's left, but I don't think we've hit that real pain metric where people are calling crypto to zero. So I guess there's some pain there, but we'll see. But I think short term, today maybe we see another like we talked about to the downside, and then naturally I think we have to take some of this liquidity to the upside.
And then, also thinking about it, if we close CME at 2680, you're talking about a $700 or $800 run in 36 hours, which is going to be a very fast move. So that also would be very leading. And this is all hypothetical at this point because it hasn't happened yet. But that would probably be a bull trap setup for sure.
Oh, absolutely. I think the last time that we pumped, I think we had the pump, where everybody was calling that the bottom, which was at our last trend line, that was at 2080, 2089, somewhere around there, 2090. No. Eyes are bad. Where did we hit? No, yeah, we hit 28, 26, I need a bigger screen, 2616. We pumped all the way back up to 3,500. There was your bull trap. Bull trap. Here we are at 1955. That was a month ago. It wasn't like it was.
Yeah.
that long ago, you know. So
Right.
big bull trap there, and here we are, all that equity basically gone.
So the market is calm before the storm right now. We're sitting here. The orders are balanced, and I think they're probably waiting for the open to get moving, which is about
All
5 minutes
right.
away. So guys, that's all we have for today. Good luck with your trading. Be careful. I think it's going to be a very tricky next 36 hours for the rest of the week. So, pay attention to those areas we talked about. Pay attention to what happens in those areas that we talked about. And try to make your best logical decisions. We'll see you tomorrow. And we'll see you tomorrow sometime between 7:30 and 8:30 in the morning. So, we're not very... what would you discipline in our start time?
We're not punctual. It's not discipline. It's punctuality.
Yes.
Look, we have real lives. This is called crypto. You got to be flexible, dynamic, right? Like this is trading. You got to be dynamic, and therefore watch the stream. Get it. And this is probably better because normally we talk through the open. Now we're preparing them for the open, so people can assess their strategies prior to coming to the charts. I mean, yesterday early, you could have got, we dropped to the downside very, very early. We've kind of have had an increase pretty early. I mean, kind of a gradual clawback. So that would indicate that we might have a stop hunt to the downside and a move back up. So watch for that. I know we're repeating ourselves.
Oh, here it comes.
The analysis.
There it comes. Here comes the hunt.
All right, brother. Well, I would like.
All right, guys.
Folks, I do.